Oh yeah. Hey guys. Welcome to the Sunday Market Breakdown. This is me, Yamu Trades ICT. You can call me Yamu. So actually, what we're gonna do here, we're gonna look at this chart. We're gonna firstly look at how, because I think maybe we discussed something on Wednesday, right? If you can look at on the channel here, I think I posted a video on Wednesday. Yes, I think I posted a video on Wednesday, yes, explaining what was gonna happen on the next 2 days, which was Thursday and Friday, right? And everything that we actually talked about, most of it happened, and most of it didn't, especially on gold. Gold went higher, while as Nasdaq continued dropping lower, right? So what are we gonna do today? We're gonna check at this chart that I actually this execution that I took on Friday. If you can see properly, you can see that this is Friday. This is Friday 27. I took the trade at 19:25, which is a South African time. So don't be confused on that, right? Because it is late actually. So I traded after the New York lunch. So this is the start. I took the trade here. As you can see my execution, I took the trade here on 7:25. Then I exited around here, which was 21:41. So I think maybe that's around. I'm not sure if like I'm not mistaken if I say 1 hour and something, right? I think, but let's just I think there's a way to actually check that. I'm gonna take it here, then I'm gonna point. So 2 hours 15 minutes. So the trade actually lasted 2 hours and 16 minutes. And that's a lot of time actually. I don't usually hold trades for that long. I used to scalp, but now because last week price action was so good into an extent that I wanted to try and hold longer because it is too clean and too nice, right? For most people, they might think that it is not too clean. So it's just perspective and what we know, right? What we know, what we know actually plays a point in how we actually interact with this market, because this thing is more like a language. So the more you understand its language, the more you're gonna be able to see more opportunities in it. So that's what we actually focusing on right now. So what are we gonna do, right? So we're gonna start off by looking. Okay, I'm gonna switch from this chart to another chart because I had another chart opened which is full of annotations, but I don't actually remember which one is it, but I think it's around here. Oh, no, not Fusion Market. I usually use Fusion Market to actually trade, so I recommend this broker actually, but I'm gonna post the link on how you can actually join. But I'm actually so we're gonna start off by looking at this chart, right? We're gonna look at papers. We're gonna look at this chart because I usually use this chart to actually analyze the whole thing, right? Because it does not have trading activity, right? The other one I'm using it to, we have here on Friday when we actually opened, right? We opened here. We opened here. No. We opened. Wait. This is yes. We opened here exactly there. We opened here. Then we went all the way down, right? Then we went all the way high again. Maybe this around 76% if I'm not mistaken. If we can put a flip on it, then we can probably see that. What is it? This is yes, this is 78%. So we actually went there to a premium. Um, then we dropped lower again. So what are we gonna do here? What I'm gonna show you is the logic. I didn't take the trade here, as you guys saw the execution, right? I only took one trade. So I didn't take the trade around here because I was busy with something else. So I couldn't engage while I was busy. So I had to let that go, right? So what we have here, we had a SMT divergence. So what is a SMT divergence? SMT divergence is whereby the price of Nasdaq and S&P makes a divergence, right? Okay, let me show you in price action what that looks like. Okay, so this is it. This is the chart of S&P. I'm gonna use this section to actually map out the whole thing, right? So what we have here is this, right? This is divergence, right? So if you can look at this chart, you might think that usually most of the time they do the same thing, right? So you might ask yourself, why would you use two charts at the same time, right? I'm using two charts at the same time because I need to find a correlation between them, right? As S&P moves first, S&P usually creates. Okay, I think there's something wrong here. Let me just filter that out. Okay, okay, okay. So okay, now I understand what's going on. So what usually happens here is that you see this higher point, right, which is 817, right? Then you can see this one, this is 818. So this point, this high and this high at 930, right? And look at this high at 925. So this is the high, the highest we had, right? um no, not the highest we had here, but this is the highest we had on this Nasdaq, not the highest, but this is the highest after the New York Open, right? So here, what did we have here? I think half past is around here. Yes, you can just put it here also because it's one and the same thing, right? So if you can look at the chart, this is half past, right? If you can see half past 9, right, which is New York Open, right? So it's here, it's on the downside. Wait, what's going on? I will. I need to open this thing. Okay, I'm just gonna. No, I'm not gonna be able to use that. Okay, let's go. So this is. Wait, I need to switch this off. So we have these here, right? These on Nasdaq, this is the high, right? If you can see, this is the high on Nasdaq. So on S&P, this is the highest, right? This is the low, right? So if the market actually creates something like this, it means that it will no longer go higher, right? Because S&P is saying no, we need to go lower, right? So S&P is actually setting the tone for us on what to actually expect on price, right? Then this S&P divergence happens, then this goes higher. Sometimes S&P start by going higher, then Nasdaq start here maybe like, you know, then the other one goes higher, then we call it S&P divergence. So what are we gonna look at here? The price went higher, crashed this high, right, on S&P, crashed this high on S&P, then it continued going lower, right? Then came back to this fair value gap, just the same way as it did to Nasdaq, right? You remember when I told you that on Nasdaq when we actually started the live stream, right? So it went back to this fair value gap. So what happened here? This one provided a cleaner fair value gap compared to this one, because this one you might say this is a clean fair value gap, but then this I usually use these, right? If there's a gap between here, between the close and the between the bodies, actually I'm gonna say it like that. So I'm not gonna put a fair value gap here because uh, most of the time it's not gonna respect it, and you might even start canceling your trades because it's not respecting it as it should, right? But then if you look at S&P, this thing is correctly placed, right? But then it's respecting it. Look at the bodies staying inside this rectangle. So this signals that we actually gonna drop lower, right? Because it's respected the fair value gap here. And also if you can look at this is a market structure shift. So we actually had a valid market structure shift, then we had a high here which was actually crashed, then we went all the way down. then moved back to 78%, which is a premium, upper quadrant. Then it started dropping lower, right? So I didn't take the trade. I'm not gonna X smart and say that I took the trade day. You also saw the executions. One execution that I took on Friday, which was last week, right? So this is the last week chart. So what happened here? I didn't take the trades. Yeah, I only took one trade. Then when I actually saw this here, that's when I actually understood that, oh, right. This is when I actually understood that we're no longer going higher, right? Because we actually crashed this after the New York launch, right? So we crashed this at this point which was formed during New York launch. Then we crashed it, then we went lower, right? What happened here? I didn't take the trade here also. It could have been better if I actually show you the chart that I actually took executions on. But this is another position right here, right? Price dropped lower, then came back to this fair value gap, respected it perfectly, then it went all the way down, right? Then came back to this fair value gap again. That's when I actually took the trade. So I took the trade here, right? Here. Came back to this fair value gap. I thought the price was gonna come to this fair value gap first, right? Before it can actually drop low. But then came back to this fair value gap. Then I knew after this candlestick that we're not gonna push higher, right? I took the trade when this thing started dropping lower, right? And it went low, then came back to this fair value gap again. Didn't take a trade there, but I only took one trade. Took the trade here, then exited around there. So what happened there? There was a huge spark, right? Spike, right? What was this spike targeting here? It was targeting these relative equal lows, right? These, because there was more of unfinished business up there. So a lot of people who actually entered late on the trade were actually putting their stop losses above here. So the market actually crashed those and went all the way down, right? Then what happened here, right? Because everyone was actually trying to short this thing because people saw that it would continue going lower, right? If you can see at this sell side delivery, right, you can probably see and probably understand that this thing is dropping, right? So as it's dropping, people are feeling like they are left out, right? So what are they gonna do? They're gonna try and short it when it here. So where they are they gonna put their stops at? Above this high, right? Above here. So that's what the market usually targets when these type of spikes happen, right? So the price went all the way down. Then I think I exited around here, if I'm not mistaken, or around here, or after this. But that's for sure. I exited around here because I because we were two New York close, so I didn't wanna open. I didn't wanna have like open positions during the weekend. I don't usually hold positions that long. I'm an intraday trader, so I don't usually like that. So as you can see, we're gonna draw back to, oh no, before that, let's move to another chart which I actually prepared for this today's live stream, right? Okay, so wait, what happened here? Okay, I'm not sure what's going on here, but this is really prepared perfectly. Okay, let me fix that real quick. Now it looks like it like this because I don't understand what actually happened here. But let me just try another chart. Maybe I did something there. So I'm actually just gonna scan now because I annotated the chart perfectly for this live stream, for today's live stream. So I'm actually gonna search for that, hoping I find it. Let me try field markets again. Okay, no, not field markets. FXM. Okay, let me try Pepperstone. This is crazy. I don't understand how I actually annotated the charts and forget that I actually annotated it. So we're gonna wait. Let's try vintage. Okay, I'm doomed. I'm doomed. Let me just accept I'm doomed. So we're gonna use it. We're gonna look at this chart using this example of Nelson 100 from the chart from forex.com. So we're gonna use that. So what did I expect here? I actually expected the price to actually come here this week, right? As I said on the live stream last week, on Sunday, right? That I actually expect the price to actually come here to this point of interest, right? This was actually my point of interest, which I actually targeted from the start, right? So what am I thinking here? I think the price is gonna move a bit higher. Okay, let me make an example of that. I hope you guys are not in a rush or anything because this is gonna take a while for me to annotate because I don't understand what actually happened here. Okay, discuss. Okay, I'm gonna take these 2 days, 3 days, right? We're gonna put them here. Oh yes, exactly like that. We're gonna put them here and we're gonna use this, right? And then from then we're gonna take how many days? 3 days. So I need like 2 candlesticks, which gonna be, it's gonna be this and that. I don't actually say that the price is gonna move like this, but this is just my speculation on price. I think the price is gonna at least attempt to do something like this, but then we're gonna see when it opens, right? So what am I thinking here? I think the price from tomorrow, right, it's gonna gap here to this downside, right? Then from those 3 days, I expect the price, it's gonna gap here, then start moving higher, right? On the second day, it's gonna move a bit higher, attempting to close this gap, right? Because we have this gap here, and we also have unfinished business here on this point of interest, right? On these, right? So it's gonna attempt to go higher there, then it's gonna crash this fair value gap up there, right? What I'm doing here, I'm actually expecting the price to actually stay below or inside these fair value gap. If it goes higher than that, then it close above here, then that's when I understand that I'm not gonna be able to engage with price because maybe there's a change of direction or something and the market has changed, right? So we're actually gonna be bullish from that point if we actually reach here or here, right? So for now it's just a speculation. I'm just gonna look at the charts and understand it now because it's closed, right? But then once it opens, that's when I'm gonna be looking at it in real time for the possibilities of it going higher or for the possibilities of it going lower, right? But for now, I think and I understand that the price, it's possible that the price might drop back to 23,800, right? Between 23,800 and 24,000, right? I don't expect the price to go to 24,000, which is this. I don't actually expect the price to go higher than this or higher than that. I don't actually expect that because there's no business to deal with here, right? The only business, the closest business we have is these relative equal lows, right? And also this 500 gap and also this low, right? And if you can look on the other side, you can probably see that we have enough room for the price to actually go lower, right? But then, because this is Nasdaq is designed to actually go higher, right? But we are getting introduced to a new narrative, so we're gonna ride the wave because we're actually gonna ride the wave, and we are speculators, man. So this is what I'm actually expecting on Nas. I think the Nasdaq is gonna go a bit higher, then it's gonna drop lower, right? I'm gonna stop here because I've actually covered most of the things here. I think I've covered most of the things. So on lower time frame. So I think here that the daily time frame is all that we needed to actually understand what we should expect for the next week, right? Oh, also remember, I thought I wanted to say this earlier. Also remember that we have economic news this week, a lot of them. I'm trying to open my calendar here. It's giving me I don't know. Okay, yes, here it is. So after so many attempts. Okay, this is 29. So we're gonna move from 29. We're gonna move from we on 30 November, 30 March. Oh my goodness, why am I not why? 30 March to 5 April, right? 2026. So this is what we have for this week, right? This week we have this. Okay. On 9/20 we have NY Fed bill purchases. Then we have this Fed chip, this speech, this guy who actually usually mostly disrupt the market most of the time, right? Then we have this Fed Williams speech. Then on Tuesday we have jobs opening. Then we have Chicago PMI. Then we have jobs at 10 a.m. New York time, right? And then we have the Fed at 12. Then we have API crude oil and at 16:30, close to the New York close, right? On Wednesday we have retail sales control, we have retail sales. It's very very important for you to actually note this when it's have something like this, like these bars. That's when you actually note it, and I understand that this is very important. It can move the market, right? So I'm gonna use that. Then we have NFP this week. Traders, gamblers, this is the time to shine. Actually, this is the time to shine, guys. So we have non-farm payroll on Friday, and unemployment rates. So that's all for this week. This is what I'm actually gonna look out for because these are major fundamental which actually move the market. So the volume here. So what's my advice on this is that do not trade before them, right? You can trade after they have happened, maybe let me say maybe 10 minutes later or 5 minutes later. Do not try to predict where these economic drivers gonna drive the market to. Do not try to predict that because most of the time you're gonna be wrong and you're gonna lose money on that. It's more like gambling most of the time because you don't really actually know where the market is gonna go, right? But then also what I've noted is that this thing usually follow the market structure, the price action, right? That's it. So we're gonna move to gold. Let's move to gold since we have this. Let's move to gold now. I think I like gold, but then I don't trade gold. I just analyze it. I don't trade it. Okay, let's try this one out. Remember last week we said the price was gonna come here, right? And it did come here on Wednesday. The video that I actually dropped. I thought because we were done with 2 days, right? On these 2 days we were actually going higher, right?
So I thought maybe we were done going higher, right? We're gonna go lower. Yes, on Thursday we actually went lower. Then on Friday, what happened? We moved a bit higher. So what does this actually mean, right? It means that there's a new high that we're actually gonna target, right? What I actually thought is that we're gonna target this high, right? The market is gonna move there. It's gonna move there and drop lower, right? If it decides to drop lower also. But what I'm actually looking at here, I don't think, yes, there's a slight possibility that the price might move lower to this, right? But then right now, I'm not focusing on that. I'm actually focusing on seeing what movement or what direction does the market picks from this, right? Is it going higher to this imbalance here, or is it going higher to this imbalance here, or is it dropping lower to this, right? So what I'm actually looking at here is that I think the market is gonna go higher, right, this week. Then maybe next week it's gonna drop lower. But then because we have economic drivers, economic news this week, that notion could be cancelled in any day, right? Because it can be volatile. So let's move to 15 minutes so that like I can probably see what I was actually targeting on here when I said that the price, the trade, the price might actually move higher, right? So what do we have here? We have relative equal highs here. I'm gonna just use this. We have relative equal highs there. These. So when the market started moving lower, I thought that we're gonna crash this before it can actually move lower, right? I thought that the market is gonna open here, right? I thought that the market from this point is gonna start moving higher, making higher highs, so that like it can actually crash this and start moving lower, right? But then we didn't do that, so it opened a new um opportunities, right? Because right now the main focus is this, and the fair value gap upside here because the price is too cheap now, so it's on the discount, right? So what do we have here? We have this buy side liquidity up there, um, relative equal highs. Then what do we have here, right? We have relative equal lows, right? So what I'm actually forecasting is that the price is gonna come here, maybe drop a bit, but I would actually be more interested in seeing how the price actually break that high on 4,602 because that's gonna tell us if the market is gonna drop lower or the market is gonna keep going higher to the fair value gap we actually talked about. So from now, I'm actually waiting for the market to actually open, then and see the upward movement. If not, it will target that this low, right? This is the low that it's gonna target if it does not move higher, right? This is the low that we're gonna target. Okay. So this is the low that we're gonna target if we don't move higher. But also, I'm just staying neutral to the market because I want to see the market rallying higher to 4,602, then going down to 4,351, right? That's what I'm actually expecting here. That's what I'm actually looking for. If not, if that does not happen, I would never engage in this price action because this is gold. I don't trade gold actually at all. So I hope you guys learned something today on this live stream. So hey, forgive me, guys. I don't have energy today. I'm actually drained. I'm tired. So maybe you might even um, get that signal today because I'm not as hyped as I can be, right? So I'm gonna close the live stream right now, and yeah, I think this is what we should expect for the week. But if nothing happens, then this means that I actually focused on the wrong thing. But then we're gonna look at it maybe on Wednesday and understand what actually happened and what we should understand from that point. So this is nice. But either way, I think the price can drop back to this, right? I think the price can drop back to that. I highly think that the price can drop back to that. If it's up there, then I expect this to be crashed also, because we still have this dead bearish movement in our heads, right? But then we're not actually fixed to that mindset. We're not fixed to that mindset. We're just speculating and